Thank you, everyone. Thank you, Ree, for that introduction. Thanks, everyone, for joining us today, and welcome to this presentation of the three main components of a winning strategy. This promises to be a great, simple presentation. I'm going to give you all of these components. You can start using these right away. We use at Specialist Trading anywhere from one of them to all of them in all of our techniques that we teach all of our students and members. So you can apply this to a current strategy that you're trading with that we think it will strongly elevate your odds for success, or you can actually use these three main components to build a strategy based off of them. Even though they aren't a full strategy per se, we're going to give you what we feel is the core of a winning strategy. Now, as I was also introduced in the introduction, I am the president and founder of Specialist Trading. As Reed stated, I've been trading for 38 years, just starting about 3 weeks ago. I started on the floor of the Pacific Stock Exchange, and even though my background is in stocks, all of my tips and techniques that I've accumulated work and transfer over fine into trading the E-mini futures as well as the currency pairs and stocks. I've traded through just about every market environment imaginable. I traded through the crash of 1987. I traded through the great bull market that followed after that. I've traded through quiet markets, through crazy markets, volatile markets, sideways markets, and I've seen and been involved with just about every type of technique around, so I know what works and what doesn't work. I've been asked to be the Director of Education for a number of websites, and around 7 years ago I started Specialist Trading, where all I do is teach and mentor my students all of the things that I currently use in my own trading. So it's really an educational company. Even though we provide our students and members with strategies and signals in which to trade, we are more about educating you so that you can empower yourself. We feel that the reason why the majority of most traders fail, it's been estimated upwards of 80%, is because you're making your trading too complicated and you're relying on someone or something to tell you what to do. So we give you all the things that I've accumulated in 38 years, and then we put them together for a nice package, a trading plan for you. And we're with you every step of the way so that you can empower yourself and make your own trading decisions. Now I'm going to share with you these three main components once again, so get out your pencils and papers and write them down. I know this is probably being recorded, but you can start applying these as early as tomorrow if you'd like. But before we begin, as always, I ask that you please take a moment to view our disclaimer. I'm going to show you performance results as recent as today using these three components, but please remember that we can in no way guarantee that any of these results will be repeated in the future. And as you're taking a moment to view our disclaimer, we're required to show you that. I would also like to take this time to invite each and every one of you to follow us on Twitter. There's our handle right there. It's abbreviation for Specialist Trading. It's at SPCLST. TRADG. You may want to write that down because I post great free information on a daily basis, anywhere from financial wisdom to actual signals that we're currently in. So and not just signals in the stock market, could be the E-mini market, could be also currency pairs. So feel free to follow us there on Twitter. Now, Specialist Trading is the educational part of our company. Pro Trader Strategies handles all of our promotion and the marketing of my strategy. So if you want to follow us on Facebook, simply log on to Facebook and you can type in protraderstrategies.com. There's a lot of great free information there as well. Okay, now I'll take all your questions at the very end of the presentation because I know we're kind of running a little bit late and I want to make sure that you get all of the information that I'm going to give to you for free in today's presentation. But I just want to start out by just sharing with you a little bit about what happened in my trading, as well as to give you a little bit of the philosophy of Specialist Trading. As I stated, we are an educational company, and I really feel what's missing in most traders' lives these days is solid education, because most traders overcomplicate their trading. You either have too many indicators, you're involved in too many chat rooms or trading rooms, you're following too much news, and there's just too many things to keep track of, and therefore you pretty much are second-guessing yourself and not knowing when to pull the trigger. And I'm saying this from first-hand experience because, believe it or not, when I first started trading on the floor of the stock exchange, this is the way I traded, and I really couldn't make a dime for the first year and a half, 2 years of my career there. I was doing all the things that I was taught to do, reading all the books, going to the seminars, and listening to all the news and indicators, but nothing seemed to have any consistency to it. I would have 3 or 4 great trades, and then my next trade, I would give everything back. So I'm sure this sounds familiar to a lot of you. I know how discouraging and how frustrating trading can be because you put a lot of work into it and you have nothing to show for it. I was lucky to come in contact with 2 or 3 mentors on the floor. These were specialists themselves who were able to turn my way of trading around. And what they basically said was, Steve, you're overcomplicating your trading. I remember they said, the first thing they said was, it is the easiest thing in the world to overcomplicate your trading. Anyone can do that. But it's the most difficult thing in the world to simplify it. And so once I really grasped that concept and I started to let go of all the conventional wisdom that was supposed to work that really wasn't working for me, that's when I started to become consistent. So this is the main philosophy behind specialist trading. We want to empower you with all this information. We want you to make your own trading decisions. But then lastly, we want to keep things as simple as possible. You're going to see today how simple these components are that make up a winning strategy. As I stated, we are an educational company, and you see how much we really put attention into that because we're giving you this information today in good faith for free, the main components of a winning strategy. All right, so why don't we begin? Here's what you're going to learn today. Component number 1, we're going to tell you what we feel is the most important component, which is trading in sync. I know we've all heard this before, but why is it so difficult? If everyone knows that you should be in sync with the markets, why is it so difficult for most traders to do that? We're also going to give you component number 2, which is a price bar pattern that you should be looking for in every strategy setup that you have, regardless if it's one that you've devised yourself or someone else's strategy or even one of mine. You should be looking for this pattern because it's the market giving you a great clue as to the direction it wants to go. And then lastly, we're going to share with you an entry technique. We feel that many times traders are correct in what they want to do, either buying or selling. It's just their entry that's faulty. So once you apply this entry technique, you can really, what we believe is ramp your odds up for success, okay? All right, so why don't we begin? Let's start off with buys, okay? Okay, let's say we're a buyer, and let's look at component number 1. Component number 1, you've all heard this before, is you must trade in sync with the trend. Everyone knows this. This is trading 101. But why is it that the majority of all traders fail? If everyone knows this, then why do most traders fail? We feel it's because, once again, we're overcomplicating our trading. We're looking at too many things to tell us what the trend is. Every educator, every seminar has a different idea of what the trend is. Some say it's a specific indicator. Others say it's a higher time frame telling you what to do in the lower time frame. Some may even say it has to do with the full moon. But everybody has a different idea. At Specialist Trading, we feel we have one of the most powerful ways of determining what the trend is, as well as one of the most simplest ways. All right, let me show you this generic chart here. I specifically made a generic chart because this applies to all markets and all time frames. Now, if we asked you to tell us what the trend was, just looking at this, I'm sure most of you would say, well, there is no trend, Steve. We're kind of just going in a ranging market. We go lower, then we go back up, and then we go back down again. Okay? Now, just once again, off-site, someone would say that, and it seems fairly obvious, but this is not the way we find out what the trend is. The easiest, simplest, and most powerful way to determine what the overall trend is to simply add a 50-period moving average. All right? And then once you do, you ask yourselves, where is price in relation to that 50-period moving average? All right? You may want to write that down. I'm going to say that again. Ask yourself, where is price in relation to the 50-period moving average? Because if price is above, as it is in this case, well, then the overall trend is up. If price is below, the overall trend is down. That's it. That's how simple this edge is, but it's one of the edges I've been using for over 30 years that have probably saved and made me more money than any other edge I know of. Okay, so that's component number 1. Going on to component number 2, we want to look for a bar that closes in the top 25% of its range. And when we say top 25% of its range, many students have difficulty with this. Just take a price bar. Let's say it's a daily bar, but this concept can apply to any time frame. It doesn't matter if it's monthly or a tick chart. When we say the range, we're talking about the extreme high for that day and the extreme low. We don't care about where the open or close is. It doesn't matter if we're looking at a candlestick chart or a standard open, high, low, closed bar. It doesn't matter. But whatever the extreme high is, and whatever the extreme low is the range. And then you simply divide that by 4 separate but equal parts. The top 25% or the top quarter is where we want to see that close, okay? And why do we want to see it close there? Because it's the market telling us, not some guru on TV or not some indicator, but the market is telling us that most likely it's going to continue in that direction. So we can't think of a better edge to have than the market telling us what it's most likely going to be doing. So if we look back at that chart once more, we see that price is above the 50 period. Okay, so the overall trend is up. This means we only want to look for price bars that close in the top 25% of their range. And these are these three right here that we have colored green now. Okay? Okay, let's go to component number 3. So we found the price bar that we're looking for. We know where the overall trend is. Component number 3 is we're going to enter upon confirmation of the trend. So what does that mean, confirmation of the trend? I'm sure most of you are saying, well, Steve, I thought we already had confirmation that the overall trend was up. Here's what confirmation means. This is our confirmation method. This is the entry technique we talked about. Once you see that bar that closes in the top 25%, once you've located and identified it, you want to buy on the next bar only if price trades 1 to 5 ticks above the bar that closed in the top quarter of its range. Okay? Because we're waiting for a confirmation that we've gone above that bar. This is giving us confirmation that the trend is resuming in our desired direction. In other words, think of a train at a train station, and you want to hop on board. You want to go from point A to point B, all right? And you see a train coming down the tracks, but it's headed in the opposite direction of where you want to go. Now, you're not going to jump on board that train because it's going in the opposite direction. But this is the way 99.9% of all traders trade. They try to pick bottoms and pick tops. What you want to do is jump on board the train that's going in your direction. It's the same way with the confirmation method. Once we trade 1 to 5 ticks above that setup bar, we're going to jump on board, just as if you're jumping on board a moving train. So if we look back at the chart again, here are the 3 bars that close in the top quarter of the range. Now remember, we have to buy on the next bar and next bar only. So we see this next bar never went up 1 to 5 ticks above, so there's no entry there. The next bar, well, we did trade above there, so that would have been a valid entry. And you see how price continued, not a lot, but it continued in your desired direction. Well, we have one last scenario here. That's where we want to buy, and on the next bar only. And remember, it does not matter where we close. As you see in most of these cases, we traded there but then closed lower. We traded here and closed lower. We traded here, closed lower. That doesn't matter. As long as you trade intra-bar, that's fine. That's your entry point, and look what happened. All right? To see how the market, not an outside source, not something else, not some chat room or not some guy on TV, but the market is telling you most likely what direction it's going to continue going. It's telling you the direction of the train, and you're just jumping on board. Okay? These are the 3 main components. Let's look at if we were a seller. They're the same rules, we're just going to reverse them. But please remember, we're not giving you a full-fledged strategy today. We're just sharing with you 3 components that make up a winning strategy. You still need to know about money management. You need to know about exits. You need to know how to track the trade and stop placement. There's a lot, 2 or 3 more components that need to go into a valid strategy. But we're giving you what we feel is the core of a winning strategy today. All right, component number 1, you must trade in sync with the trend. All right, well, before we showed you when price was above. Well, now if we look at this overall generic chart, we look at this, and once again, someone would say, well, Steve, there's no trend here. We're kind of just in a ranging market. Well, to the members of Specialist Trading, that's not true, because we, first of all, place a 50-period moving average on all of our charts. So see, it doesn't matter if this were a 5-minute chart, a monthly chart, a weekly chart, or a daily chart. We always have a 50-period moving average plotted. And we ask ourselves, where is price in relation to that? Well, in this scenario, price is below. So there you have it. The overall trend is down. It's that simple. We don't have to look at a higher time frame to tell us what to do in a lower time frame. We don't have to look at support and resistance. We just keep things as simple as possible. Component number 2, we want to now look for a bar that closes in the bottom quarter of its range. Why the bottom quarter? Because the overall trend is down. So if we look at the same generic chart, we find one bar here that is colored red that closed in the bottom quarter of its range. All right? Now lastly, we want to enter upon confirmation of the trend. Now what is that again? Well, confirmation is we want to sell on the next bar only if price trades 1 to 5 ticks below the bar that closed in the bottom 25% of its range. So in other words, we have to trade below there. As you see, here's the bar we located in the bottom quarter of its range. Remember, this is the top of the range, this is the bottom 25%. We are below the 50 period. So now we want to sell if we trade somewhere down here, 1 to 5 ticks. It's up to you. Some of our members like to trade 1 tick below. Others like to give it 5 or even 10 ticks below to have a little bit more to it. It's up to you. We teach strategies. Remember, we give you education. We don't give you systematic way of trading. So in this particular example, we traded below there. And once again, it does not matter if it was below there. As you see, once again, we traded and then closed higher. That's okay. This is your entry. Look what happened. Okay? The market itself, not an outside source, not some website, not some guy on TV or in some book was telling you, but the market told you most likely we are going lower. Why? Because we're below the 50-period moving average and because you located a bar that closed in the bottom quarter of its range. Lastly, you just waited for confirmation that the train left the station. All right, so now you know the 3 components. Once again, we've given you these in good faith just to show you that we are an educational company. Our main goal is to educate you. It's to teach you how to trade, not to trade for you, not to simply give you buy and sell signals so that you can blindly take them without knowing what you're doing. We want to educate you once again so you can empower yourself. So let's look at some recent examples. Let's start off with stocks for all you stock traders, and we're just going to look at the same 3 components applied in some current charts that happened within the last 3 weeks to 4 weeks. Here's AVB. The first thing we ask ourselves is, where is price in relation to the 50 period? Price is above. So this means that we will in no way try to short AVB. The only thing we're looking for are buy setups. You see how simple that is? Right off the bat, half the battle is done. We know that we're only going to be buyers. So we locate a bar here that closed in the top quarter of its range. So we would buy here if it traded above there the next day, but it never did. But guess what? This bar did close in the top 25%. We're still above the 50 period. So now this is where we're going to buy on the next day if we trade there. But it never did. And these 2 bars, the next 2 bars closed in their lower range, as you see, so there's no setup there until we get to this bar, which closed in the top quarter. So this is a valid setup, and we're going to enter if we trade on the next day only, which we did. So there's our buy setup right there, and look what happened. Okay, this was in the first or second week of January. Now, here's an example of Mattel. We see here that price is oscillating below and above the 50-period moving average, but for a more advanced way of trading, all you need is to know where price closed. So in this case, this is for our more advanced traders, all we need to know is where price closed. If price closed below the 50, the overall trend is down. If price closed above the 50, the overall trend is up. Now in this first scenario here, we had a bar that closed in the bottom 25%, but it never traded below on the next bar. So there's no setup there, and it's a good thing. See, this is why you wait for confirmation, because had you simply sold at the market, well, look what would have happened in the next 3 or 4 days. All right? You would have lost, gotten stopped out, or held on to a big loss until finally you would have said, oh, I can't take this anymore, I'm getting out, I'm throwing in the towel. I'm taking a huge loss, and right then, most likely the market would have come back down below the 50. And we also closed in the bottom 25% of its range. So now this is a valid setup to go short. Sold on the very next day. Remember, it closed higher, but we don't care about that. All we care is that the train left the station and then it went 1 to 5 ticks below. So you got short, and look what happened in the next week. Okay? Once again, we're not looking at any news. We're really not concerned with anything going on economically. We don't look at any reports. We only listen to the most important thing we feel, which is the most important thing, and that's the market itself. How about the E-mini S&P? All right, let's look at some different time frames. Let's start out by looking at a daily chart of the E-mini. Now, this is mainly for educational purposes because we know a lot of people don't trade the E-mini overnight because it's very expensive to do that. But let's just say you did, or you wanted to use the same approach to buy options, because you simply could just transfer over instead of buying the future or the stock. You could purchase some long calls or long puts if it was a sell. We have the same concept apply here in the E-mini. We are above the 50-period moving average coming into this. Here's a valid setup bar in the top 25%, but we never traded there in the next bar, so nothing happened. And we see here that the remaining of the bars close in their bottom quarter of their percent until we get to right here. This closed in the top 25%. Now, even though we had a couple of closes below, it's okay, we still closed above. So this is our entry, and we gapped up much higher. Now, I realize some of you, probably that's why you don't want to trade these overnight, because there's some large gaps overnight. Also, it's expensive. But let's just say you had purchased options. You could have purchased them at this level right here, and look what happened in the market. The E-mini went up roughly another 50, 60 points, or roughly about $2,000 to $3,000 per contract. If you want to go down to intraday trading, here's a 60-minute chart. This was in the last couple of days of last year, coming into the first week of January. Once again, we're originally above the 50 period, but now we have a bar that closes in the bottom quarter. And here's our first setup, but we never traded below. So there's no signals to take. But then we have this bar here, which closes near the low of its range. And so this is your setup to go short only if you trade on the next 60-minute time frame, which you did. So you could have gotten short, and then look what happened. Okay, all because the market was giving you a sign that most likely it's going to be headed lower. Now, let's say you had missed that trade and said, boy, I missed it. I didn't get a chance to get in there. Don't worry. The market always gives you more than one chance. Look at all these other examples here where you could have had a chance to get short the market. Now, just to show you that this technique works in any market, in any time frame, we're not just cherry-picking things that happened the last 3 weeks. This was happening 2 hours ago, actually maybe 3 hours ago, because we started a little late, but I had to take this snapshot just right before today's close, about a half hour before today's close. This is on a tick chart of the E-mini. Now, coming in roughly about 10 o'clock Pacific time. This is, I live on the West Coast, so I trade on the West Coast and Pacific time. As you see in the lower left-hand corner, this is roughly around 10 o'clock, coming into roughly 12:40, or just about 20 minutes before the close, or a half an hour before. All right, so for all intents and purposes, price is above the 50-period moving average. There was a nice rally towards the end of the day, and today being the day. How could we have taken advantage of this? Well, we look for the three components. The first thing we ask ourselves is, where is price in relation to the 50? And price is above. So this tells us that we're only looking to go long. That means we're looking for bars that close in the top quarter of their range, and then we want to see that they're exceeded by 1 or 2 ticks on the very next bar. Well, could we have had any chances to apply these three components in the last couple of hours of the day? I think so. These were all examples of the three components that I just taught you, how you could have taken advantage of them roughly about 3 hours ago. And the same concept, the same type of patterns work on the Forex markets. Here's a weekly chart of the Canadian dollar. Price is above the 50, so therefore there is no way we are thinking of shorting the Canadian dollar. Right off the bat, you don't have to worry about taking a sell signal or looking at some levels that someone says it's topped out or it's tremendously overbought. We don't care. We're only concerned with going long if we're above the 50 on this weekly chart here. So now we just find and locate the bars that close in the top 25%, and if they're exceeded on the next weekly bar, that's where you jump in and buy. Now we had roughly about 5 scenarios here. If you had just taken the first one, you see on the left, I mean, we're talking about thousands and thousands of dollars you could have made since this last October. And you can also go intraday with this. Here's a 4-hour chart of the euro dollar. Obviously, the euro dollar has been going down lower and lower. Well, we don't really care what the economic conditions are. We don't care what's going on in Europe. We don't care about any news. All we care about is where price is in relation to the 50-period moving average. And on this 4-hour chart, price is below since the 18th of December. So that's all we're looking for. We're just looking to go short the euro dollar. And once we apply the three concepts, look at all the examples you had and scenarios you could have had to go short the euro dollar. You see, once again, my mentors taught me that trading is really simple. It's just ourselves as traders that make it difficult by overcomplicating things. I've just given you 3 extremely simple edges that you can start applying as early as tomorrow morning that have a high level of consistency to them. You don't have to go into any chat room or trading room to find out where they are. You can start using this on your own. All right, so let's recap. We taught you these components. The first one is you must be in sync with the trend. Everyone knows that. From the first day of trading, you all know that you have to trade with the trend. The only trouble is there are 1,001 ways in which to trade the trend according to all these educators. In our opinion, the simplest and most powerful way to find what the overall trend is to simply add the 50-period simple moving average. And then you ask yourselves, where is price in relation to that? If price is above, the overall trend is up, and you're only, and I say only, going to be looking for buy setups, regardless of what strategy you use. If price is below the 50-period, you're only going to be looking for sell setups, regardless of which strategy you use. All right? Now, one way to heighten your level of consistency is to look for a bar that closes in the top or bottom 25% of its range. Why? Because the market is giving you a clue that most likely it's going to continue in that direction. All right? Not some trading guru, not some trading room, but the market is telling you it's most likely going to continue, as you just saw with all of those examples I just shared with you. Okay? So look for that bar for your entry. And the entry technique is our confirmation method. Simply states that once you locate that bar that closes in the top or bottom quarter of its range, don't buy until it trades 1 or 5 ticks either above if you're going long, or 1 to 5 ticks below if you're going short. These are extremely valuable components to any winning strategy that you can apply to a strategy that you already trade that you feel comfortable with, and we really feel confident that it will increase your odds for success. We use anywhere from just one of these to all 3 in all of our trading techniques at Specialist Trading. And you can also, if you're so inclined, you can devise a strategy if you want based off of these 3 components. Once again, we're an educational company. We want to educate you with sound fundamental things that have stood the test of time, things that were taught to me some 38 years ago on the trading floor that continue to work, that have a high level of consistency. So feel free to use them, and you can apply them once again as early as tomorrow. Now, in closing, I just want you to ask yourself, and ask yourself honestly after what you've just seen here, do you think any one of these edges could have helped your trading this past year? Let's just say you wanted to use that entry technique. Maybe you thought, you know what, that could help me. I really don't go for the other stuff. I like my own idea of discerning what the trend is, or I don't need to look for those bars, but maybe I could just apply that confirmation method where I only enter above or below the setup bar. Or what about what, in my opinion, is the most important tool, which is the 50-period moving average? If I were stranded on a desert island and I could only trade with one tool, this would be it. It would be just simply the 50-period simple moving average. This one technique has saved me more money and made me more money than anything else because it gets me on the right side of the overall trend. In fact, I can almost guarantee if you go back and look at your last 10 or 20 trades, most commonly the ones that didn't work, the failures you had, I can almost guarantee that it was because they were out of sync with this 50-period moving average. So go back and look at your last 10 or 20 trades, look at your winners, look at your losers. Most likely the winners were in sync with this simple rule I share with you. Most likely the sellers were because you were out of sync. You were trying to buy below the 50 and trying to sell above. So ask yourself, do you think any one of these edges, just one of them, could have helped your trading this past year in 2014? What if I could give you 3 or 4 more edges just like this but totally different in their approach? What if I could give you 5 or 6 more edges like this, as well as a strategy, a full-fledged strategy with stop placement, with exit points, with entry points, and money management? I just want to take the last couple of minutes here of our presentation to talk to you about a great offer we have for all of you in attendance today. That's our Secrets of a Stock Exchange Specialist training session. What this is, it's a video seminar. It's a video course. I spoke roughly 2 years ago in Denver in front of a large group in Denver, Colorado, and they were lucky enough to videotape it with high definition. It was really nice recording of the entire 3-hour presentation. All right. In that presentation, I gave many more high probability trading edges, such as the one I shared with you today, but totally different. I talk about which indicators to use, especially which ones not to use. I go into the difference between a system versus a strategy. I talk about chart patterns, but I think I talked about probably what I feel is the most important thing in this training session. That's the complete rules to one of our most consistent pullback strategies. That's strategy number 1. It applies to any market, any time frame, in any direction. In fact, let me share with you some current signals that our course members took in the strategy number 1 course. These were actual signals that are generated using strategy number 1 that you get all the rules to in this training session. And as you can see here, this is a pullback strategy. So we're waiting for price to sell off, so you get some really nice entries on this. As you see here, we had a very nice sell-off in CVS on the 5th, just 2 or 3 weeks ago, and look at the nice move that happened after that. It also works in the E-mini markets. Here's a 5-minute chart. We just showed you how it worked on a daily chart in stocks. Here's a 5-minute chart of the E-mini a few weeks ago, where towards the end of the day, we had 3 really good sell signals on a 5-minute time frame. Same thing. We're looking for these little bounces or pullbacks to the upside to go short, and then we jump in. Then lastly, you can also apply it to currency pairs. Here's the Canadian dollar. You see here 6 great signals all the way the market is going up. All the while, we're pulling back to these nice levels. It's an extremely consistent strategy, but it's also very simple to learn. It's only got about 5 rules or so. We give you all the rules, entry, exit, and stop placement in the 3-hour training session. This is a video course. This is not something that comes on a DVD that's mailed to you. You have to wait to have it mailed to you, and then once you do, you have to make sure you properly load it and upload it okay. This is an online course, so you just simply, once you sign up, we'll furnish you with the link, and it's yours to watch whenever, as long as you'd like. It's yours for life. I know a lot of people, we've had this deal in the past, are concerned with, well, how long is this good for? Is it, in other words, can I watch the video for 2 weeks before it expires? No. Once you become a member and purchase our Secrets of a Stock Exchange Specialist training sessions, this 3-hour video is yours for life. You can study all of these edges as well as review the strategy rules as long as you'd like. And I think the best part of this is that once you become a member of Specialist Trading, you have access to my personal email address. So you can contact me whenever you'd like. This is not something where we just throw it to you and say good luck with it. You're basically a student of mine for life, and you can contact me with any questions. If you don't understand how something works, you can email me, and I'll answer your questions as soon as I can. Okay? Now, as I stated, our division, our educational division, is Specialist Trading, but our promotion side of our company, the sister site, is Pro Trader Strategies. Now, Pro Trader Strategies advertises this Secrets of a Stock Exchange video seminar on their website for close to $1,000, okay, just to purchase this 3-hour course. Because of our affiliation with Investors Information and Reed Chapman and all the attendees today, we've dropped it down to $37. So you can be up and running with a full-fledged strategy that trades pullbacks in any market, in any time frame, all the rules. You can know about 5 or 6 more trading edges, such as the one I just shared with you today. And you can also have access to my email address and contact me whenever you'd like. Something that usually costs close to $1,000 for $37. Now, ask yourself, I think most of you may have spent more than that just trading today. So that's an extremely discounted price, but for a limited time only. So if you're really serious about having more edges, such as the one that I just shared with you, and becoming aware of your own trading and making your own trading decisions, I strongly urge you to take advantage of this $37 deal before it goes back to $997. So here's the information you need. Once again, Pro Trader Strategies is our sister site. They market and promote all of my courses and all of my videos. You can email them trading@protraderstrategies.com, and any one of the trading consultants are there. They can contact you and set up the video for you right away, or you can call them directly at area code 310-598-6677. I think the last thing you can do, which is probably the simplest, is just see the link there. You can copy that link at the very bottom. You can just copy and paste it onto your browser. I believe they're going to post that on the chat box to your right as well. And you can just copy and paste that, and it will automatically take you right to the discount page. Okay, so you'll be there right away. And as you see on the right, there's a trading@protraderstrategies.com email address as well. I want to thank you for waiting. I'm sorry we're running a little bit late, but I can take a few questions here while we just have some time. Let me just open up the question and answer box. Let's see, Ken is saying, Stephen, what if you wanted to use the 20 or 35 period simple moving average instead of the 50? The 50 represents a big move. That's a good question, Ken. We always get asked this, though. The main thing we want to get instilled in all of our students is to learn how to use this concept where that this is not some magic number, the 50-period moving average, but it's the concept of knowing that if price is below, then you should only be looking to go short. If price is above, you should only be looking to go long. But most people do the opposite. Most people will buy below the 50 and sell above. Now, as I stated in the opening segment of the presentation, I said my mentors taught me that you must keep things as simple as possible. Extremely simple. And you saw how simple these components are today. The reason why we use the 50 is because it transfers over extremely well onto all markets and all time frames. In other words, we don't want to be changing everything when we go to a 5-minute time frame and then all of a sudden add a different moving average or a different component when we're trading a weekly bar. You know, that complicates your trading. You start mixing and matching too much, and it just gets too overly complicated what market you're in. So we want to keep things as simple as possible. So having said that, in my 38 years, the 50 works well if I'm trading a 5-minute chart. As you just saw, if I was trading the tick chart, as I showed it in the 2500 tick chart, that was just about 3 hours ago, or if I was trading a weekly bar. So that's why we focus on it. Now, there's nothing wrong with using those 20 or 35, but I would much rather, especially when you're beginning out, just focus on the 50. And remember, it's not a signal. It's not giving you a, you know, just because price is above or crosses above does not give you the green light to buy at the market. It's simply telling you what side of the market to be on, okay? That's the main thing. Let's see here. Richard says, looks great, pretty good edges. Well, thank you, Richard. And once again, as I stated, we are an educational company. We're sharing all this in good faith with you, just to share with you how, you know, our goal is to educate you. We're not trying to, you know, present here for 45 minutes and then have you purchase a, you know, $10,000 product. We're more about teaching you how to trade so you can ultimately go on your own. Most of the students at Specialist Trading stay with us for a good couple of months, and then they pretty much got it under their belt, and then they go on to be successful or consistent traders. And that's good. That's what we want. They check back with us every once in a while to get a tune-up, but most likely they're on their own, and that's what we're looking for. Okay. Bill asks, will the 3-hour video give us the stop placement and exit for the material you presented today? Hi, Bill. Yes, it will. Well, actually, it will give you the stop placement and exit for the strategy, but you can apply them to what we just shared with you today. Remember, today what I gave you were components. It's not a full-fledged strategy, so components do not come with stop placement or exit. You have to have other rules that make up that strategy. Now, all of those rules are presented in strategy number 1, which we do throw in for the $37. So yes, you will have stop placement, you'll have money management, you'll also have exit, you'll know exactly where to place all of these. And if you want, you can apply them to what I just shared with you today. Okay? Jeff asks, Reed, please post. Okay, he's asking to please post the link again. Oh, okay. I believe he did. If you look there, people are asking if they can post the link so they can just simply click it on instead of pasting it onto the browser. If you look in your chat box, thank you, Reed. It's already in there, so thank you very much. I appreciate it. TC Tan asks, Mr. Primo, where are the stops generally placed? Well, you know, that comes in the course, TC. You know, we've already given you basically the majority of a good and consistent strategy. You know, for $37, I don't think that's asking a lot. You can get all the rest of that information. We just can't give everything away for free. You know, it'd be similar to walking into a restaurant and saying, hey, where's the dessert? Can I have that free too after I've given you the meal? You know, we want you to become a part of the process. And in good faith, we've given you these 3 main components. We don't believe $37 is a lot to ask. In fact, as I stated, I think many of you probably spent more than that just today trading. Okay. Thomas asks for recording. I believe if you contact Reed, you can request a recording of this, and they'll fill you in and set you in the right direction where to get a recording of this. Okay. Once again, in closing, I know we're running a little late, and I don't want to take anyone else's more time. There's a great speaker coming up next, I believe, Todd Gordon. I used to be affiliated with him. He's a great speaker, so stick around for him. He's got a lot of great information as well. So I don't want to take up his time. But if you're seriously interested in, you know, becoming a part of the process and taking trading into your own hands, you know, sign up for this great discounted deal. Once again, in a day or so, it'll go back up to $997. So I don't think you can beat $37 for all the information that's included. Okay. I want to thank you all for attending today. I want to thank Investors Inspiration and Reed Chapman for asking me and inviting me to speak. And I look forward to all of you becoming members of mine at Specialist Trading. Okay. Thank you so much. This will conclude my part of the presentation, and stick around for the next one. And thank you so much.